What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have 3 dividend growth stocks to buy. These are actually sin stocks, and you guys have mentioned and requested for me to have some videos on sin stocks that are very popular. Now, I'm not going to mention Altria or Philip Morris or British American Tobacco or any of those tobacco companies. These are actually very some of them are low key dividend growth stocks that a lot of people aren't aware of. So I'm going to post a video and reveal to you these 3 dividend growth stocks. One of them might surprise you. These might be Roth IRA material to you guys as well. So I'm very excited to reveal to you guys these 3 sin stocks. And believe me, they have increased their dividends over time. And one of them is beautiful Roth IRA or traditional IRA material, which I'll reveal to you. And again, I'm going to pump about 5 or more videos a week for you guys. And you guys got to hit that notification bell and make sure you smash that like button. And let's check these stocks out right now. And here's the first one for you guys. This one has struggled against the S&P since the pandemic hit. It has a dividend yield of 6.15%. The symbol is GLPI, Gaming and Leisure Properties. PE ratio is 19.87. Again, real estate investment trust. Remember, FFO is more important. Volume is 1.29 million. The market cap is 11.17 billion US dollars. Year range is 4071 to 5146. The day range is 4489 to 4637. There is a huge dip. And I'm going to show you these guys as a real estate investment trust and their portfolio. And I swear, if these weather changes too, it's just driving me nuts in Ohio. So our portfolio consists of 51 premier gaming and related facilities and amenities geographically diversified and well-positioned across 17 states. So here's the thing about these guys. So this is the Ameristar Blackhawk in Colorado. This is Denver Downs, Denver, and right over here, the Argosy Casino Alton. So remember, this is a sin stock. People like gambling. DraftKings at Casino Queen, Hollywood Casino Aurora, Hollywood Casino right here in Illinois, Ameristar East Chicago, the Casino Resort in Florence, Indiana, Hollywood Casino Lawrenceburg, Indiana, Tropicana, Evansville, Ameristar Council Bluffs. So these guys, people are going to gamble. Gambling, people really sometimes go overboard with gambling, and it is somewhat of an addiction to people. There's another casino. I mean, people need to be smart with their money. Some people like going to the casino for play money. I honestly would go to the casino for drinks and just have a good time, maybe 1 or 2 games, but people really like this stuff. Here's Boomtown, New Orleans, the casino and hotel. Hollywood Casino, Baton Rouge, Louisiana. I bet you that was popping when LSU won the national championship. So here's a few places in Louisiana, Lake Charles, Casino. So you're getting the picture of what these guys are about. So I'm going to show you their revenue. I tell you what, this is quite attractive. Now look at the revenue from 2014, 2015, 2016, 2017. This is in millions US dollars. So 591, 575, 828, 971, 1055, 1153, 1153 during the pandemic. So these guys were still pretty strong as a company and as a real estate investment trust. So that makes them very attractive. What's even more attractive is their dividend trends. So check this out. 2014, it's 52 cents. 2015, 54, 56, 60, 62 in 2017. 2018, 63 cents. 2019, 68 cents, 70 cents. Now look, a little bit of a dip right here during the pandemic in August. It went from 70 cents to 60 cents. But look, it's 67 cents. And look, all of a sudden we have a special dividend, it appears, and right on the 23rd of December in 2021. So 67, 69, look at this. They're catching right back up to where they were. Revenue's popping. Their dividend yield is 5.78% with a PE ratio of 20.08 and an annual dividend of 268. So this is not financial advice for entertainment purposes only. Disclaimer in the description. Revenues jumping up, dividends starting to come back up. This is a very attractive dividend growth stock. Now, they took a little bit of a hit during the pandemic, kind of a given. I mean, these type of real estate investment trusts that are specialized, they're going to take a hit. And some of them, like I bought EPR Properties when the dip happened, they resumed their dividend. So some of them cut their dividend, some of them reduced their dividend. These guys are making a huge comeback, and they are cheap right now. They're less than $50. Let's jump to the next dividend stock. And again, I'm going to emphasize this thin stock, VICI Properties. This one's cheap. It's $27. Dividend yield is 5.33%, PE ratio 15.37. Again, a real estate investment trust, FFO. Volume 8.13 million. The market cap is 20.86 billion US dollars. Year range was 26.23 to 33.35. Day range was 26.95 to 27.95, and its previous close was 27.87. So look at these guys. Look at that dip during the pandemic, 12.31, and they're starting to make a comeback in the S&P. All of a sudden, they took a big dip again. So I have a high percentage, I think 4 or 5% in my M1 Finance dividend portfolio. And in my description and comment section, I also have a referral link with M1 Finance. If you're interested in signing up, we both get $50. So there is a deal going on right now. And you can use my Death Star as a model. Now, I haven't perfected it yet. There's some things that need fixed. But if you want to use that as a stepping stone to build your dividend portfolio, go for it. Again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description. But I tell you what, with my dividend portfolio, I have QYLD, XYLD, and RYLD at a 4% percentage so that monthly dividends can buy the quarterly dividends like VCI Properties, and the dividend growth stocks can really start doing some damage. So let's check out VICI Properties. So I'm on their website. A lot of you guys that are new to this channel, because you guys have been subscribing like crazy, and don't forget to hit that notification bell. Look at this, right when they say invest in the experience. So they're experiential real estate investment trust that owns one of the largest portfolios of market-leading gaming, hospitality, and entertainment destinations, including the world-renowned Caesars Palace. Their national geographically diverse portfolio consists of 28 gaming facilities comprising over 62 million square feet and features approximately 25,000 hotel rooms and more than 250 restaurants, bars, nightclubs, and sports books. So right here, remember, things are starting to, the economy's taking a little bit of a hit because of the Ukraine-Russia conflict. But this is what they got. Caesars Palace, Las Vegas, Harrah's Las Vegas. So I'm going to go over their map because this is very attractive. I'll skip golf, but look at their locations. This is Jack Casino in Cleveland. I've been there before, hanging out with friends. I'm from Northeast Ohio, by the way. Jack Thistledown. Every time I would drive to work, I would drive right by Thistledown. And these places are always popping, especially people like gambling with horses. There is the Greektown Casino Hotel. That's a very popular one. We know about Vegas. And here's Harrah's Lake Tahoe. Margaritaville, Boston City. That's a pretty popular one. And then here's Harrah's North. So they're getting bigger. And I'm going to show you the revenue. I didn't go over their golf resorts, but the hotels are the big ones. Golf, they're starting to get a little bit bigger. It's really, I really want to emphasize these hotels that they have. And I'm going to show you their revenue. Here's VICI Properties. And this is in millions US dollars. Look at this, new kid on the block. The revenue is 187, then 897, then 894, then 1,225. So this is in millions US dollars. So they're generating some cash. That's what makes them attractive, but I'll even show you their dividend trends, which make them even more attractive. Now check out these dividend hikes. 2018, it was 16 cents, and it hit 26 cents, then it hit 28 cents, then it hit 29 cents, then it hit 33 cents, and then it hit 36 cents. So it has a 5% dividend yield. It's sitting at 27.04, and the dip is there. And I'm going to jump to the final dividend stock. This one is traditional or Roth IRA material, and it's a very well-known stock. excellent dividend growth stock and an excellent sin stock to buy. Check this out. And that stock is Church and Dwight, CHD. Has a dividend yield of 1.03%, a PE ratio of 30.63, a volume of 2.08 million US dollars. The market cap is 24.62 billion. Year range was 77.62 to 104.84, and its day range was 99.13 to 102.78. Previous close was 100.69. So what makes Church and Dwight not only a sin stock, but an excellent dividend growth stock and an excellent traditional and or Roth IRA stock? Check this out. So first, I'm on their website, and they show you and reveal to you their stock split history. So these guys have split their stock in the past, and they're doing pretty well against the S&P. So they have some nice trends. So again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description, but you're seeing some nice trends with stock splits, and probably, I'm not saying this, and I'm not giving financial advice again, but with their trends, they could potentially split their stock again because their price is going up, they're beating the S&P. It's going to get to the point where investors say, oh my gosh, this is too expensive, I don't want to buy this. And the board of directors will probably say, whoops, we have to make a decision. That's where they usually split their stock. What happens with numerous companies, especially really good dividend growth stocks. I'll go over some brands that they have. So right here, this is why they're a sin stock. Trojan Brands is a very popular stock for people that have some fun. And protection is very important. OxyClean is really important. I tell you what, when I wore white scrubs, if my ink, I have ink stains from my pens, I counted on OxyClean a lot, and that's really good cleaner. Extra is another one. Kaboom is an excellent one as well. These guys have products that help clean things. So that's one thing that's important. What about this? First response, early result pregnancy test. Ooh, that would be terrible with me in NP school. That's why I'm very careful with what I do, especially with people you refer to as yield traps. Very attractive on the outside and very toxic in the inside. You got to avoid those type of yield trap people. So here's the thing. That's what they carry. And I'm going to go over their revenue. Here's their revenue. 2015, 3,394, then 3,493, then 3,776, then 4,145. Then 4,357, then 4,895, then 5,190. This is in millions US dollars. They're generating revenue like crazy, going up. That's very popular and attractive. And I'm going to show you their dividend history. And look at this. This 2013, 28 cents, and 31 cents, and 33. Then there's that stock split 17, 19, 21, 22, 24, 25, and 26. You're not seeing any yield traps with these. Now, the dividend yield's 1.04%, but honestly, who cares, because the dividend growth is extremely attractive. Now, right here, I mean, 2018, it's 21 cents, then it hit 26 cents. So this is a very beautiful, again, traditional Roth IRA stock. Might be a decent day trading stock, but dividend growth is what makes this stock attractive. The revenue is increasing, they're in demand, and it's a big sin stock. It's probably, products wise, it's up there with being a sin stock, other than Altria and British American Tobacco and Philip Morris being sin stocks with tobacco products. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend. You guys have a good one, and I will post a video tomorrow. Take care.